Today I traded Tesla options, made a 21% return in the first 15 minutes of the trading day, and I'll show you exactly how. So here we are at the open with a Mara Bozel candle, okay? A power bar coming from a gap up. All right, so when we are this far above the place of origin, our moving averages, we are betting on a mean reversion. So I went ahead and bought a 412.5 put for $53. All right, $53, and I'm trading options, ladies and gentlemen, on Tesla. All right, so again, we're in a put. So when we buy a put, we are betting that the price is going to go down. All right, the current price is roughly 433.87, and we're moving back. So we're already at 26% profit in the first 2 minutes, but I did not take profit because my profit target is the 21 period moving average. All right, so at this particular time, it being the first candle, I didn't want to snatch at profits. They sold me a tail bar, which made me believe that we were going to continue to the downside. I went ahead and put my stop loss at the top of this first candle. So I'm still giving it some time to establish its top, and then I'm going to move the stop loss to the exact top. Now, again, this week, what are we working on? Say it with me. Cutting the play and going the other way. Cut the play and go the other way. So as much as I'm looking at my profitability, I'm really trying to assess my behavior at the choice point. Yes, acceptance and commitment for traders. So the choice point is that moment in time where we get to a place where we keep making a decision that doesn't serve us. And every time we make the choice that doesn't serve or support our visions, it's a setback. And then we have to experience the emotional ride and roller coaster that comes with that choice. And then it goes away. And then we live our life until we arrive again at the choice point once more. All right, so I had an opportunity to take profit. I did not do that. So here we are again at the choice point. We have broken through the purple line, which is our stop loss. But I've also learned that because we're not just trading events and locations, and that we're also trading levels, if there is a level close to your stop loss, it is helpful, as long as you're not at your max loss, to see how the price reacts to the level before you cut your play. So this is why I said in a couple videos back, I'm evaluating my results when I use my stop loss as an area instead of just a skinny line. So in this particular trade, my stop loss is this area between the purple line and 436.23, which is the resistance level that we have drawn on the chart. All right, so we are getting some rejection from the resistance level, but more importantly, I want you to pay attention to the event that just popped up. So even though we moved past our stop loss, it gave us an event. We got a bearish reversal. So we had a power green bar followed by a power red bar. All right, a bear power bar pointed to the downside that took out almost the entire green candle, almost 80% of that candle. So in the last video, we talked about the bullish reversal. This is the opposite. This is the bearish reversal. So anytime I see this event and it's happening at a location that's far away from the 21 period moving average, which is also far away from the 200 period moving average, I'm typically going to enter a put and we'll look for what we call a pullback. So right now I'm playing the pullback, or if you want a more technical term, they will call it a mean reversion. Remember in high school you learned about mean, median, and mode? So a mean reversion is when the price reverses from being expensive or cheap back to the average price, or instead of expensive, some people call it overbought, and instead of cheap, they call it oversold. But I'm trying to give it to you in layman's terms so that you can understand. So basically, expensive when the price of the stock is way above the average prices, or cheap when the price of the stock is way below the average prices. So right now, we started off, we had a push up in price. The price was above the average prices, and I'm looking to see it come back to about the average price. And my favorite measure is the 21 period moving average and then the 200 period moving average. All right, so that's what we're looking for right now. Don't forget to visit stockmarketdaddy.com and take the problem gambling awareness assessment to see if you have a problem gambling. If you find yourself not really knowing much about options, but you're watching my videos complaining that I'm trading so small and that I should be putting more money up, you should swing past stockmarketdaddy.com and take the assessment. Because right now, what I'm exercising is discipline, which is allowing my nervous system to be settled while I'm in the midst of the trade. It's allowing me to focus on being disciplined and not focused on money. It's also allowing me to learn how the stock moves and how it works on the chart. It's allowing me to zoom in and focus in on levels, not just events and locations. And it's giving me less stress when I'm trying to identify patterns on the chart. So I love trading small. I went ahead and took profit at 20%, but I want you to pay attention that I took profit before I reached the 21 period moving average, and I have to stick to my profit targets. Okay, peace and love, and I hope you get rich. Subscribe, comment, and like this video.